Why does it always feel like we're one step behind the market? We buy into the euphoria just as the music stops, and we sell in a panic right before the recovery begins. The reason is simple. Most of us are watching the price, but price isn't the signal, it's the result. What if you could see the market's internal health, like an MRI, before the symptoms become obvious? What if you could know where we truly are in the market cycle, not based on headlines, but on the market's own structural data? That's exactly what CycleScope's gamma layer is designed to do. And today, we're going on a deep dive to show you how it works. Gamma analysis isn't about a single magic indicator. It's a synthesis of 6 core pillars of market health. Think of it as a complete diagnostic checkup for the market. And here's what makes it powerful. Each pillar is measured using specific institutional-grade charts analyzed on weekly timeframes to filter out the noise and capture the real structural trends. First, there's breadth. This is the foundation. Are all the soldiers marching, or just a few generals? If only a handful of mega stocks are holding up the index, the foundation is weak. Gamma measures this by looking at charts like RSP versus SPY. That's equal weight versus cap weight performance. It also tracks what percentage of S&P 500 stocks are trading above their 50-day, 150-day, and 200-day moving averages. When these breadth indicators are rising together, participation is healthy. When they're diverging from price, that's an early warning. Second, leadership. This is the engine. Is the market being driven by risk-on growth sectors, or are investors hiding in defensive stocks? It tells us about the market's real appetite for risk. Here, Gamma examines ratio charts like consumer discretionary versus consumer staples, growth versus value, and semiconductors versus the broader market. These aren't just numbers, they're revealing where the smart money is flowing. And by analyzing these on weekly charts, we're seeing the trend, not just the daily whipsaw. Third, credit and liquidity. This is the fuel. A market can't run on empty. If credit markets are getting stressed, the fuel line is getting clogged. And that's a major warning sign equities often ignore until it's too late. Gamma watches high-yield bonds relative to treasuries, charts like HYG versus IEF and JNK versus IEF. When these ratios are rising, liquidity is abundant and risk appetite is strong. When they start rolling over, credit stress is building before it shows up in stock prices. Fourth, we have the macro environment. This is the weather. Is it a sunny day with tailwinds, or is a storm brewing on the horizon? Gamma tracks the long-term trend of the S&P 500 itself, the copper-to-gold ratio, which reflects economic growth versus fear, the US dollar index, and the 10-year Treasury yield. These macro indicators set the structural backdrop. They don't time the turn, but they tell you what kind of environment you're operating in. Fifth is sentiment. This is the crowd's emotion. Is everyone euphoric and complacent? That's often a contrarian warning, or is everyone terrified? That's usually when the best opportunities are born. Gamma uses the equity put-call ratio smoothed over a long-term baseline to measure whether traders are aggressively hedging or speculating. Extreme fear often marks bottoms, while extreme complacency marks tops. And finally, the volatility regime. This is the stress gauge. Is the road ahead smooth, or is it full of potholes? Crucially, volatility is the last thing to show up. It's the result of weakness, not the cause. Gamma monitors the VIX to VXV ratio, that's the term, structure of volatility, and VVIX, which measures the volatility of volatility itself. When these indicators start spiking, stress is transitioning from potential to actual. And that's the secret. These pillars don't move at the same time. Breadth and liquidity are the first to turn. Volatility is the last. Gamma understands this hierarchy, which is how it sees the turn before it happens. By analyzing all these charts on weekly timeframes, it's reading the structure of the market, not reacting to the noise. So how does Gamma use these 6 domains? It synthesizes them to identify which of the 6 market cycle stages we're in right now. Today, the platform says we're in mid-cycle. This is the confident trending phase of the market, but how does it know that? It's because of a cluster of confirmation. Look here. Leadership is bullish. Breadth is bullish. Credit is bullish. Volatility is bullish. We have a powerful cluster of four domains all pointing to a healthy, risk-on environment. This isn't a guess. It's the weight of the evidence across multiple independent data streams. But the real power of gamma is in its depth. What you see here is layer one, the high-level diagnosis. It's the what. But with one click, you get the why. This is layer two. Here, gamma gives you the full story. It provides a phase confidence score, in this case 0.82, meaning the model has high conviction in its mid-cycle diagnosis based on the alignment of all those indicator charts we just discussed. It gives you the cycle tone, a nuanced description of the market's mood. Right now, it's a constructive bull market backdrop, but it also warns that rising concentration and optimistic sentiment warrant forward-looking vigilance. It's not just telling you it's sunny, it's telling you to watch for clouds on the horizon based on what the leadership and sentiment charts are revealing. And finally, the overall summary. This is where the engine synthesizes everything into a clear, human-readable narrative, explaining exactly how the six domains are interacting, how breadth, leadership, credit, macro, sentiment, and volatility are all aligning or diverging. This synthesis is what prevents you from overreacting to a single bad indicator or a scary headline. So, what does this all mean for you? It means you can stop reacting to the market's past and start positioning for its future. The gamma analysis isn't a crystal ball, but it is an MRI of the market's internal health, built on institutional grade charts analyzed on time frames that matter. It helps you understand where you are in the cycle so you can be skeptical when others are euphoric and confident when others are fearful. It's time to stop chasing price and start reading the structure. It's time to see the turn before it happens. Explore the gamma analysis for yourself. Start your 7-day free trial of CycleScope today.